the Mortgage Calculator. We do this show every weekday at 11 a.m. Eastern, where we go through live mortgage rate pricing and then we do a deep dive into a different topic every day. We will wait just a couple of minutes to get started here so we can go live on all the different platforms. We are streaming this on YouTube, Facebook, Instagram, and LinkedIn. We'll give everybody a chance to jump on before we get started here. In the meantime, feel free to drop a comment there in the chat. See, some people are already dropping comments there. Good morning, Adam, and the other Adam. Two Adams tuning in already. And again, for those of you just jumping on, we're just waiting a couple of minutes here to give everybody a chance to hop on, and then we will get it started. In the meantime, you can feel free to drop a comment there in the chat, and we'll get started momentarily. Hope everybody's been having a great week. Happy Thursday, almost to the end of it. Some more people dropping comments. Thank you for that. Good morning, everybody. And it looks like we are live on all the different platforms, so we can go ahead and get started. So what we'll do is we will take the chat off the screen here, and we will get into it. Welcome, everyone. My name is Kyle Hershey. I'm the COO of the Mortgage Calculator, joined here by our president, Nick Hershey, and our sales manager, Jose Gonzalez. We are a correspondent lender that specializes in non-QM loans. And what we do on this show every weekday at 11 a.m. Eastern is go through live mortgage rates for actual programs, everything from conventional and FHA to some of our non-QM programs that we specialize in, such as bank statements and DSCR loans. Now, today's deep dive topic that we're going to get into is something we're very familiar with here and that we specialize in at the Mortgage Calculator, which is DSCR loans. Now, we have plenty of programs from 1 to 4 unit and 5 to 8 unit, not only regular residential DSCR, but mixed use DSCR as well in the 5 to 8 unit. But today we're going to be talking about expanding on that to 9 to 100 units. So today's deep dive topic is 9 to 100 unit DSCR loan. So I'm going to have Jose Gonzalez, our sales manager with 27 years of experience as a loan officer and realtor, do a deep dive into that here shortly. But before that, we'll do what we do every day, which is pull up our pricing tool and go through the live mortgage rates. So Nick, why don't we go ahead and pull up the tool and see what the market is looking like this morning?
All right. I've had some good news recently, so I think today will be good. Let me go ahead and switch my screen, and we'll get started. So as Kyle mentioned, this is our pricing tool. This is going to show us the general rates and the APR, including all the fees. For today, it is July 13th, just after 11 a.m. Eastern, so most of our programs are live. Again, as I mentioned, we had some good economic news, so the rates have been going down over the last day, so that's a good thing. So hopefully today will be good. If you would like a full breakdown of all the fees itemized that go into the APR, a full loan estimate, please get with one of our team members. We have over 300 licensed loan officers and can offer our primary and second home loans in 24 states that we're licensed in. And we can do our DSCR business purpose, which Jose is going to go into a deep dive here as well. Those are semi-commercial loans. Those are available in 44 states. So please get with our team if you'd like to get one of those. For our demo here today, we're going to set up a scenario so we can compare across the programs. We're going to set everything today to a $400,000 loan amount, an LTV of 80% loan to value, 20% down payment. We're going to set the desired price to 99. That means we're going to ask the computer to find the best rate at one discount point in cost, which is our typical request. And we're going to compare our loan programs. We'll start with conforming conventional as we do every day, compare that to FHA, which is usually the next best option. And then we'll go into expanded guidelines, also known as non-QM, where we have over 5,000 additional loan programs using alternative income that many other banks or lenders don't have. We also offer VA and USDA. VA is only for our eligible veterans and active service members. If you are, please let us know. We'd be happy to quote it. But since not everybody is, we don't do that live. And same with USDA. That's only for properties that are eligible in a USDA area. If you do happen to be shopping there, let us know. We'd be happy to quote it. So we'll start today. Conforming conventional. We'll set up a purchase, 30-year fixed loan. primary occupancy, single family home, 1 unit, state of Florida, county of Miami-Dade. And for all the demos, use an estimated FICO score of 760 and an estimated debt to income ratio of 40%. So with these settings, let's check out the conventional options this morning. Yay! We love it when we see downward movement. There was some violent movement here. That's about the biggest one-day jump since we've been doing the show. So yesterday we were at 7.3, 7.4, something like that. And now today we're at 6.875 rate for one discount point and cost. And that final APR, remember, we're always going to use APR to compare apples to apples across all the different programs, of 7.042. So just a hair over 7. Hopefully we're down below 7 by the end of the day today, as long as things keep going positive. So that's amazing. Definitely recommend our borrowers out there shopping. That's about time to pull the trigger there. And good job being patient. Now let's go back to our pricer. And if for any reason our customer doesn't qualify for conventional, usually the next program is going to be FHA that we would consider. That will allow a little more leniency on credit events. And FHA does allow a much higher debt to income ratio that we can use. So typically that's the next option if there's any problems qualifying for conventional. However, we'll keep everything else exactly the same so we can compare apples to apples across the programs. So let's see what the FHA has done today. Not as a violent shift here, but obviously downward momentum is good. So the best option this morning, 6.125 rate for 0.625 discount points and costs, and a final APR of 6.705. So just as it has been for since they've made some changes here to FHA, FHA is actually a little bit cheaper for our borrower that qualifies for both. So definitely recommend our customers that qualify for conventional and FHA. Check out FHA here. Remember, conventional was just a touch over 7 on the APR. Here we can offer FHA for 6.705, so about 0.3 cheaper overall for our customer, even though FHA requires mortgage insurance both upfront and yearly. That's included here, and it actually is a better deal. So definitely do not discount the FHA options. And again, I expect these will probably be even better on tomorrow's show or this afternoon. Now, if for any reason our customer doesn't qualify for FHA or conventional, many other banks or lenders or MLOs are stuck, but that's where we love to shine here at the Mortgage Calculator, where we have over 5,000 additional options under expanded guidelines. So for the same exact scenario, we'll keep everything else the same, but when we select non-QM expanded guidelines, we can choose a different income option. So full doc is what we use for FHA and conventional. That's 2 years of tax returns. Most of the times we'll choose one of these options to choose the alternates, such as asset-related programs, business bank statement programs, our investor DSCR, we're going to talk about here for investment properties in a minute. We have our personal bank statement 12-month. That's the most popular program by far. Will be our demo today. We also have RSU, stated income, VOEs, 1099, P&L, no income at all. That's our special CDFI loan. But the most popular option for our demo is going to be our 12-month personal bank statement program for our self-employed borrowers. So many times our self-employed borrowers, when they submit 2 years of tax returns for a conventional loan, will have various write-offs and things that may not allow them to qualify or not allow them to get enough income to where they can get the home that they really want. So in this case, we're going to solve the problem with a non-QM program by using 12 months of bank statements, no tax returns involved, just the last 12 bank statements, to determine a debt to income ratio of 40% in this demo using just the cash in the bank statements. So for most self-employed borrowers, they'll qualify for double, triple, quadruple the income using this method and therefore qualify where they would not qualify otherwise. So these are amazing programs. We love our non-QM options. So let's see the comparison here for a non-QM program. So again, we love it when these options are very comparable. Best option today, 7.25 rate, a little bit more expensive. Obviously, non-QM is going to be a little bit higher rate, a little bit more expensive, 2.375 disc points, but the overall APR here of 7.362 for our borrower to solve their problems and get into that home they really want. And remember, conventional was just over 7, so about 0.3 difference between conventional and non-QM. That's relatively nothing to use a totally different income-based model. Definitely worth it. You'll see there's a lot of other options here that are a little bit higher rates. Some of these programs may allow things like bankruptcies and other loopholes in the guidelines that would otherwise put us out of qualification for a standard conventional loan, but we can do that here under these non-QM programs. So these are amazing. Definitely recommend our borrowers out there need a little extra help. Check these options out. And before we pass it to Jose, we always want to do live rates on investment properties. So if we switch the occupancy to investment, set up the same scenario, 80% loan to value, 20% down payment. We'll do our last two demos for live investment property rates. We'll check out the conforming conventional programs, and then we'll switch over to expanded guidelines, aka non-QM. Remember, the government programs, FHA, VA, USDA, those are not eligible for investments. So we'll simply compare these two. We'll start with conforming conventional, keep the same setup as we have for all our other demos. All we've changed here is the occupancy. So let's see what the investment property adjustments are for conventional. So investment properties are always going to cost more. There are pretty hefty loan level price adjustments that the conventional programs have added. So unfortunately, the computer is not able to find a program for one discount point in cost. So the best option here, though, is a 7.375 rate, great rate, for 3.5 discount points in cost, and a final APR of 7.625. So some great options here, but most of our investors ask to go for a higher rate and don't mind going at a higher rate as long as the property cash flows, so they can save these discount points. This $14,000 in this demo is a lot of money that an investor would like to maybe purchase another property with. So most of the times our investors ask for other options. Unfortunately, for conforming conventional, they have some limits here right now with these hefty adjustments. So that's where we love to present our non-QM. So for the final demo, we'll set up ADLTV, investment property again, and select non-QM expanded guidelines. So for an investment property, we have to set up things. First, our income verification. For a investment property, our DSCR loan is the most popular income verification by far because it doesn't actually require any income, no employment, no income from work. We're simply going to use the estimated rental income from the property we're purchasing in order to determine a DSCR ratio, debt service coverage ratio. So if the estimated rents can cover the PITIA, the mortgage expense for the mortgage we're proposing, that is a ratio of 1.00 or higher, aka the property cash flows on a monthly basis. If the property doesn't quite cash flow on a monthly basis, that's a ratio of under 1.00, and we still have options for that as well. So for the demo today, as we do every day, I'll set it to 1.5, which is about the highest we have. That way we can see all the different options. And the final thing, for an investment property under non-QM, we always have a prepayment penalty as standard. 3 years is the standard for most of these programs, so that's what we always do for a demo. There are options for zero prepay that will cost more, and not all loan programs allow it. And same with 5 years. If you want to save a customer some money that's going to hold a property, there are some options there, but not all loan programs allow it. So in order to show all the different best options, we will select 3 years as we do every day. So let's check out the DSCR options this morning. All right. Option at the top here, 8.125 rate for 0.725 discount points and costs, and a final APR of 8.182. So remember, conventional was at 7.7, I believe, on the APR. Here, the APR just over 8, so very comparable, just about 0.4, 0.5 more for a DSCR option. So most of our investors that see both options side by side, about 90-95% of them that see both, will end up with a DSCR loan, because a lot of the benefits here, no employment, no income, our investors can do 1, 2, 5, 10 unlimited loans at the same time in order to cash out multiple properties, purchase multiple properties, just a ton of different flexibility. And as we cruise down the list here, some of these options at a higher rate may allow things like short-term rental income, may allow things like foreclosures and bankruptcies and other credit events that would put you out of qualification for conventional. So please get with our team. There's hundreds of options here under DSCR, and we'd be happy to find the best one for you. Now, let me go ahead and switch my screen. And we'll bring up today's topic for our expert, Jose. We're going to be talking about a very special set of our DSCR loans. Obviously, it's not in our instant pricer. There is no way to get necessarily instant pricing on a 9 to 100 unit commercial, multifamily property. But we absolutely love to present these options. We do have a pretty standard DSCR loan, so different than your typical commercial financing that you would find for these large projects, and a little more standardized and what we're used to here. So, Jose, I'll go ahead and let you introduce the rest of it, and then we'll bring up your examples if you're ready.
Good morning, everybody. Thank you for joining us for Daily Rates Live with the Mortgage Calculator. This is one of my favorite rates topic because this is really a product where we can shine above the competition. You'll see what I'm talking about when I show you all of the super low rates that I have for this very unique product, right? On this, the main thing to note about our product here is that it is not really restricted by zip codes, by different MSA restrictions that they have.
Which would be typical for regular commercial financing, correct?
Correct. I mean, the first thing you know that they do when you call anybody and for this type of product is they're going to ask you, okay, what's the zip code? They don't care about the DSCR. They don't care about any of that kind of stuff. First thing they're going to ask you is what's the zip code? Then they're going to go check demographics, and they're going to let you know either yay or nay regarding different things that they look at, population density, crime, things that in the residential world you would not be able to deny a property on. I mean, that I think they call that redlining. I think it's what
yeah,
it
wouldn't be compliant to deny a loan for any of those reasons. But remember, commercial, they make their own rules. They can deny it for any reason just because they want to. So
correct.
That's a lot of benefit we have here with a standardized program where there's less just blank denials, where we have a very standardized set of rules we can operate under.
Right. And so there's also a little bit of a higher vacancy, or should I say lower vacancy factor that they allow on this product. So it is more lenient, more user friendly, right? So, I mean, you're going to be able to penetrate a lot of those B and C tier markets. Now, what I will state is the rates that I'm showing here today is for the top tier market. So what they may do, rather than deny it just because they don't like the population density, they'll just make some adjustments, some rate adjustments, possibly some loan to value adjustments, but you will be able to get the product done. The only thing that would hold you back here with this loan would be if for whatever reason it's deemed to be in a rural location on the appraisal, then the deal is dead. But other than that, they're just going to review the property based on its merits. There is a minimum DSCR of 1.1 on this product, so it does follow all a lot of the same DSCR guidelines that they follow for a mixed use product. Pricing is also very similar to the mixed use product, unless again you're in a B or C tier market, where then they're going to make some adjustments. Maximum LTV on this product is 75% on a purchase, 70% on a cash out refi. And on the purchase side, they are much more lenient on the credit score than on the cash out refi. Cash out refi is minimum 700, whereas on the purchase, you can go as low as, hold on now, 660. Now, it's not going to be 75% LTV on a 660, of course, but you will be able to do the deal, and the rates are going to be very similar to the higher FICO score rates because they're going to limit the loan to value to offset the higher risk of the lower score. So, I mean, those of you that are pricing this out with some of our competitors are for a 30-year full-term loan, which is what we're talking about here again. And we're not talking about a 5-year term or a 10-year term with a 25 or 30-year amortization, which is typical for most true commercial products, we're talking a full 30-year term. So when you're pricing this out on a full 30-year term with some of our competitors, you are probably seeing rates in the tens and a half for a full 30-year term commercial product using DSCR. So this is pretty exciting stuff, what I'm going to share with you now here. So for our first example here, we have 760 plus credit. So 760 is the top tier, and this is 25% down. And you're looking here, some pretty good options, 9.375 is the lowest cost option, and you can buy that down all the way to 8.375. So these are amazing rates. If you notice the DSCR rates that Nick shared with us a couple of minutes ago, very similar, except this could be up to 100 units. This is for anywhere from 9 to 100 units. So this is best case scenario here.
And we're talking about residential only, right? No mixed use.
Oh, yes, correct. This is all residential. You need, there is a minimum, there are requirements here. The units, I believe it's minimum 400 square feet. They have to have a full kitchen. Can't be a kitchenette. It has to have a full kitchen. And it has to have its own bathroom. We're not talking about a rooming house, boarding house, shared space like that. It has to be, individual units that can be occupied by somebody to live in. That's why they're asking, requiring full kitchen and a full bathroom. So now for our next tier is 740 to 759. We could still do 25% down payment. So you'll notice that the rate changes by 1/8% only to drop down to the next tier. We're looking at 9.5 as the lowest cost option, 8.5% as the lowest rate option. And I'll take you down the progression of these scores. Here now, our next tier, 720 to 739, still 25% down payment. Again, here the rates change by 1/8%, 0.125%. You're looking at 9.75 lowest cost option, 8.625 lowest rate option. So now here's where things change a little bit. 700 to 719, it requires 30% down. So, 5% more down payment. But now you'll note, due to the lower down payment, your rates actually improve by 1/8%, 9.5% lowest cost option, 8.5% lowest rate option. But we still have more good opportunities here now, because we can do 680 to 699 with a 35% down payment. Now, when I've been pricing this out in some other options out there, this 680 to 699 at this LTV is in the high 11s to low 12% rate. That's why I get so excited when I see 9.375 as our lowest cost option and 8.375 as our lowest rate option. Keep in mind, I'll take you back up so you can, see that this is 680 to 699 credit score. We're talking sub 700. Some outlets won't even touch this product if you're below 700. But wait, there's more. 660 to 679 credit score, 35% down payment. Yes, the rate does increase a little bit, 10.125 with 9.125 as the lowest rate option, but that is still way lower than what you could find elsewhere. Now I'll give you a couple of refi options. I'll give you the highest LTV option, and then the lowest credit score option. So, like I mentioned before, 70% is the highest for a cash out, and this option is for a 760 plus credit score, and you will note 9.375 as our lowest cost option, 8.5% as our lowest rate option. And then for our last example here, this is the lowest credit score at which they will do the cash out. Again, remember, cash outs are riskier. They really prefer purchases, but they'll do it. And this is at a 65% LTV with a 700 to a 719 credit score. Still good rates because the LTV drops, so they don't really hit you that much. You're looking at 9.375 as your lowest cost option and 8.375 as your lowest rate option. So many opportunities here for your investors to join the movement of multifamily. So and like I was saying, they do follow the guidelines of the mixed use for this when they're vetting the investors. So they are pretty lenient as well. So reach out and we'll help you out.
All right. I don't see any questions asked here. Oh, looks like we got a question. That's more of an internal question that you can ask your manager. I don't see any general questions there. So I think we can go ahead and wrap it up. Amazing programs here. A lot of people wanting to get into this space of multifamily, so take advantage of it. A lot of people would love to purchase a 20, 30, 40, 50, 100 unit property. They just don't know that they can realistically, right? But as you can see here, they can, not even that much down payment, don't have to have a perfect credit score, don't have to have the property in an exact location that everybody is willing to loan on, right? Like most of the commercial lenders require of you. So,
and best of all, also, no tax returns required, no personal tax returns, no business tax returns. A lot of the commercial outlets are most of the time will ask for tax returns from the personal guarantor to see how they're handling their personal finances.
We're talking about no tax returns, no income verification, no employment verification, nothing. Right. So absolutely great program. So if you'd like to learn more about the programs, you can visit us at themortgagecalculator.com. We have over 330 loan officers all across the country that can help you out with these type of programs. We do this show every day, a weekday, I guess I should say, 11 a.m. Eastern time, where we go through the different rates and then do a deep dive into a different topic. So thank you, everybody, for tuning in. Thank you, Dick. Thank you, Jose, for the examples. And we hope to see everybody tomorrow, 11 a.m. Eastern time, for the next episode of Daily Mortgage Rates Live with the Mortgage Calculator. Have a great day, everyone.
Thanks, everybody.
Thank you, everybody.